Hello and welcome everyone to the week ahead commodity report, where we of course will be reviewing the markets for the week ahead. So first of all, what do you need to know as we go into a new week here? Well, we did have non-farm payrolls data on Friday, which actually surprised a lot of traders due to the higher than expected headline number not having much effect on gold at all. And we've spoken about this previously, that you really need to be very much on top of fundamentals, what is happening geopolitically, and of course what we're seeing right now with respect to the coronavirus. And in fact, at the same time that we had this breakout to the upside on the US dollar index on Friday, we also then had a press conference from the World Health Organization, which of course helped gold continue to get that safe haven bid. In fact, that breakout on gold managed to net us 270 points that we banked on gold over 3 trades. Not only that, last week as well, we caught a 1,000-point move on palladium, and we hit our profit target on the US dollar index for 405 points, and we also caught a 105-point move on platinum. So we've really continued to capitalize on these breakouts with the precious metals in the latest week, and this is where a lot of pure technical traders have really been caught out, starting to go for sell shorts on the precious metals, where really that has not made a lot of sense at all. You really want to make sure you're savvy at the moment to geopolitical news. Many traders started to look for sell short opportunities on the precious metals and got caught off guard by this additional breakout that we had later in the week over Wednesday, Thursday and Friday, where we of course discussed with you last week you want to watch out for that counterflow move, where typically the metals, they do pull back at the start of the week, they get them bid from Tuesday and Wednesday onwards, and often we then have that rally on Thursday and Friday. And that's of course what many of you saw as well at the end of last week on gold with that breakout to the upside. I'm pleased that many of you managed to capitalize on that. And what we're seeing right now on the Sunday open is across mainland China, there have now been 3,062 new confirmed infections on Sunday, which brings the overall total to 40,171. And this is absolutely having a big impact on the market, and it's what many traders who are purely technical are not paying enough attention to. And this is why really technical strategies will not work for you only using technical analysis alone. You really want to pay a lot of attention to fundamentals, and especially what is happening at the moment with respect to the coronavirus, providing gold with that safe haven bid. So we've seen the World Health Organization now heading over to China as the coronavirus toll has hit a daily record. So with that, let's actually move over to the charts and we'll talk you through exactly what we're seeing with gold at the moment. So first of all, gold right now is trading at 1,570 US dollars per ounce. Off the Sunday open, we saw another push higher yet again, as we've seen in the last couple of weeks here, where Sunday you see this squeeze higher. Off the open, we've hit 1,575 US dollars per ounce. This is where then you start to see the profit taking and pullback as we go into Monday and then typically Tuesday as well. This was the case last weekend too, where we had that initial spike higher. Over Monday and Tuesday, we saw that sell-off, and the previous week as well, we had that gap higher on gold on the Sunday open, Monday and Tuesday sell-off, and then the rally again Wednesday, Thursday, and then Friday. And again, last week, rally Wednesday, Thursday, and Friday. This is what we've discussed many times with you. So the expectation is that we could get a bit of a pullback here, which is very much the norm with gold at the start of the week. So over Monday and Tuesday, I'm basically looking at range-bound trade again over this week for gold. So I am looking at the potential for a revisit back towards the swing highs here later on in the week. But again, I'm not going to be surprised to see another pullback here back towards the lower end of the channel. So I'm looking for range bound trade. I'm looking to capitalize on this with a pullback, lending into buy opportunities on a pullback back towards 1,560 US dollars per ounce this week or lower. And then I'm looking to capitalize on another rotation and retest back towards the swing highs. So this is ultimately what we're looking at over the course of this week. Now, it might be that we do get some degree of support even above that. You can see right now at $1,570 per ounce, we're seeing a bit of a pause for gold at these levels right now. But the overall expectation would be that usually over Monday and Tuesday, you can pull back a little bit further. That can give a great opportunity to get in slightly better with respect to price for the week. And then I'm looking for another move later on this week back towards the upper end of the range and retesting the swing highs here. So that's what we're looking at with gold over the course of this week. Again, it's been great on gold here in the latest week, banking that 270 points profit. Many of you actually caught really tight entries here on that pullback at the beginning of the week around that 1,550 US dollar per ounce zone on gold. So well done to everybody who capitalizes on that in the latest week. Now let's actually move it over to silver as well. So if you have a look at the silver price action at the moment too, we're continuing to consolidate on silver in the latest week. In fact, the gold to silver ratio has started to tick higher again here, which does suggest over the course of this week, we are going to see gold outperform silver. The expectation is silver, we're going to get again that counterflow at the start of the week, so we could easily come back and revisit the lower end of this channel around $17.60 per ounce, possibly even lower than that over Monday on Tuesday. But then later in the week, I would look for a potential uptick again here within this consolidation, taking the price back towards the upper end of the recent ranges here. So potential tap back towards that $17.75 to $18 handle within a usual consolidation here for silver. You can see where the price action is coiling. It's pulling back a little bit at the beginning of the week here. My preference right now is more so to have additional positions on gold as opposed to silver at the moment. Silver's definitely lagging. The gold to silver ratio is suggesting that gold is going to be outperforming silver over the course of this week. But essentially, I would look for a dip lower over this week, but then support to start coming in between $17.50 to around $17.75 per ounce, then another rotation back towards the upper end of this channel between now and Friday. That would be the expectation on silver over the course of this week. Now moving over to US oil, we have seen again another gap lower off the open, gapping down to $49.54 per barrel. Now US oil right now is trading just above $50 per barrel. We've seen this a lot lately, where off the Sunday open, gold will tend to break out initially, gap higher, and then after that we can start to see some profit taking and a retracement over Monday and Tuesday. And often what we're seeing within the energies complex is the energies will gap lower off the open. They'll then retrace to come and fill the gap, which is exactly what we're seeing on oil right now. And then once the gap has been filled, it rotates back again, back down towards the swing lows. So I am looking for, once the gap has been filled on oil, for another retracement back towards the weekly lows here. So I am essentially looking for another test back towards $49 per barrel. And in fact, I'm looking for a move to between 48 to 49 US dollars per barrel over the course of this week. And at that point, I will be looking for buying evidence on US oil, and then the potential for another retracement back towards resistance, which right now is residing around 52 US dollars per barrel. So again, I'm looking for a range here on oil, but I am looking for some pressure to the downside, another break back below the swing lows here, and essentially a move back below $49 per barrel. Look for buying evidence at that zone, and then looking for a potential rotation back towards resistance over the course of this week. There's a very clear correlation between the number of people who are getting infected with the coronavirus and the impact that that's having negatively on oil prices, and vice versa. Once you see any positive narratives regarding potentially a vaccine, or the World Health Organization, once they provide their findings from the investigation in China, that can then provide a positive narrative for the coronavirus if we are starting to see a de-escalation with that. And that's where you can start to see the precious metals pull back a little bit, and that's where oil can catch a bid. So it's just well worth being aware of that at the moment. And as I mentioned previously, you really don't want to be using outdated technical strategies in these markets. This is where traders who are using pure technical analysis are absolutely getting chopped up, not just in the precious metals or the energies market. It's happening across the board for them. They're getting chopped up a lot in the forex markets. They're also getting chopped up in the equities markets. We know because we're coming into contact with many traders every single day externally, and this is where you need to be utilizing a research-driven approach in the markets. If you're consistently getting chopped up with your technical analysis analysis strategies utilizing outdated indicators, you need to be looking at a research-driven approach where you're aware of the cycles in the market. You're looking at seasonality. You're looking at what the hedge funds are doing versus the retail traders in the market. Do you know, for example, that over 85% of retail traders have continued to be long in oil over the last 3 weeks, trying to catch every single dip here, looking for it to be the low in the market as oil continues to drive lower with all of the narratives regarding the coronavirus. You also, of course, want to marry up your strategy alongside fundamentals, geopolitical risk, research to get an edge in the market, and of course our in-house intelligence at the Gold and Silver Club can also help you massively as well to get that edge in the markets where you're not losing because you're using an outdated technical strategy with indicators that simply will not work in today's market conditions. If that is why you're not consistent right now, it's because you're not utilizing a research-driven approach in the markets. You cannot get away with only using technical analysis these days in the financial markets. There is no edge at all by doing that. So with that, if you would like to join a community of successful traders and learn a research-driven approach to your trading, there is an opportunity for you to do so. As a member of the Gold and Silver Club, you get access to our exclusive live trading room webinars. You also get access to real-time trade alerts, trading research and market insights, access to our private Members Academy membership site, as well as support and one-to-one mentoring. For more information about the service, just go to www.jointhelivetradingroom.com. The link is also below this report in the description. So just click on the link, make an application, and we will of course get in touch with you ASAP. And do make sure you subscribe to our YouTube channel. That way you're always kept updated with all of the latest commodity reports.